on the RLB crane index, where we've got more building and more cranes than I believe almost anywhere else in North America outside of, I know Miami's doing quite well, but extreme growth here, but still it's, now we're running into pricing issues and a pretty serious housing crisis.
What is going on, guys? In this episode of the Collecting Keys Real Estate Investing Podcast, we have Nick Hill of the Canadian Real Estate Investor Podcast. He is a absolute, just all over the place, and in a good way, real estate entrepreneur who has his hands in all sorts of things, from having rental properties to doing flips to he has a big lending business, a lending brokerage business that he's doing all sorts of different stuff that's actually pretty creative too. And all in all, he's just a really knowledgeable guy, and he has the largest real estate investment sort of education and media brand in Canada. So we go into all sorts of details about the nuances of Canadian real estate versus American, kind of how he runs his business, what they look for deals. There's super wacky like mortgage practices up there that would make it very challenging to do anything down here in the US with how we typically analyze deals. So tons of really interesting content there. And then he also goes into his lending business and the different kind of ways that he is structuring some creative loans to make some pretty sweet money. Basically just brokering loans with people that need creative stuff to people that need creative loans, right? So brokering is essentially the wholesaling version of the lending side of real estate that most people don't think about. And he has it mastered, and he's doing some really great things there. So overall, a ton of great information. Nick Hill is a really nice guy. Absolutely reach out to him at all the places that he plugs at the end of the show. Definitely go listen to his show as well, the Canadian Real Estate Investor. Even though it has Canadian in the title, it's a lot of like larger macroeconomic stuff and real estate tips that will be absolutely applicable to anybody that's interested in this industry. So go check that out, and I guarantee you'll gain a lot from it. Besides that, guys, go to collectingkeyspodcast.com/free to get your free 5-step guide to start generating off-market leads, and enjoy the show with Nick, guys. It's a great one. All right, guys, today I am here with Nick Hill from the great land up north, Canada. He runs the Canadian Real Estate Investor Podcast. He has a company called LandBank that does all sorts of deals all over North America. I tried to ask you your specific niche before we hopped on the show, and you listed me, you gave me a laundry list of things. So you really are a true real estate professional in every extent of the word. I think so. So anyways, Nick, I appreciate you coming on the show. I would love to hear more about your background and what exactly you do with the Canadian Real Estate Investor Podcast and your LandBank company.
Awesome. Yeah, Mike, quite the introduction. I appreciate it, and great to be here. Love talking to my fellow North Americans south of the border as myself, my partners. Most of our holdings and a lot of our attention is obviously focused up in Canada, hence the name, the Canadian Real Estate Investor Podcast, and the fact that all 5 members of the team with LandBank are here in Canada, but there's so much more opportunity in the States in different strategies can be implemented. So, we face our own unique challenges up here, but I appreciate you having me on and looking forward to get into this. I guess I'll give a quick rundown of a few different things we're doing. So I'm a loan officer, what we call a mortgage agent up here north of the border. So that's kind of one of my day jobs. The other thing we do is we release a podcast twice a week, Tuesday and Friday mornings. We've been doing this particular podcast for a year, we're just about to hit our 100th episode. Super exciting. The podcast, to be honest, has completely changed my life, and I think the trajectory of my real estate investing career, and we can get into that as well. Also a active landlord, so we do have property managers and whatnot, but I still end up myself and the team still end up involved in issues and working with the team to resolve those issues, still actively looking for deals. So, my weeks are quite different. And then on the LandBank side of things, I play a great marketing and business development role. We've got some really, really sharp guys on the team, investment bankers, CPA, one guy that's really experienced in the private lending and construction space. So we make up a great team. And with LandBank, we fund deals across the country, do debt and equity, construction financing, and general real estate services, advisory services. So, bit of a nutshell there, but I mean, you asked me a funny question. How would you, if you were in an Uber, how would you describe what you do? And I just simply say, real estate investing and podcasting if I feel like talking and explaining myself.
You cover all the bases. So you say all across North America. Are you like a typical North American country where you think you're the only one that exists? Or like you do it in Canada as well as the U.S.? Because I know that's always a thing with Americans. We forget that Canada's up there. We forget that Mexico's down south, right? And Canada, I think, might be the same. So, is all your stuff based in Canada, or do you do it across the U.S. as well?
Yeah, great question. So first and foremost, America has the luxury of forgetting, because you guys are literally 10 times the size of Canada. The California population and GDP is larger than Canada, so we don't forget. We're very aware. Maybe not so much of Mexico. That doesn't really affect us whatsoever. But we are so directly tied to your economy and what the Fed does, the Bank of Canada follows essentially, right? There's an old adage, I don't know if it's popular in America, but it certainly is up here. Probably that not. When the States, when America sneezes, Canada catches a cold. I don't know if you've ever heard that one before, but it's a common saying these days.
We don't ever think about Canada down here.
I know it's funny.
I'm just talking shit.
Well, I mean, some people do and some people don't. I think obviously the states that border Canada probably think about it a lot more. And probably some places like maybe like the Carolinas and Florida, where tons of Canadians are investing. I'm sure they're a bit more aware of it, but. Yeah, there's a lot of like flight of capital specifically to Florida. I mean, like the winters up here. I'm in Toronto, so it's funny you asked if we forget that America exists. No, we're very aware, but sometimes people in Toronto, which we call downtown Canada, and very naive people like to compare it to New York City, but we're probably 50 years behind New York City easily. I live in Toronto. It's the biggest city in the country by far. It's a few hours away by flight to both Chicago and New York. So kind of East Coast, really impressive. Like we on the RLB crane index, where we've got more building and more cranes than I believe almost anywhere else in North America outside of, I know Miami's doing quite well, but, extreme growth here, but still it's, now we're running into pricing issues and a pretty serious housing crisis. But anyways, 1 in 4 Canadians live in what's known as the GTA, which is the Greater Toronto Area, and the Golden Horseshoe, which kind of wraps around Lake Ontario. So we don't forget about America, but sometimes some people in Toronto forget about the rest of Canada, and the rest of Canada is not like that.
That's like every country, though, right? I mean, you go down here and people from LA, they think that they're the only ones that matter.
Of course.
New York, it's the same thing. But no, that's funny. I live in Spokane, Washington, so I'm about 2 hours from Canada. So me and my wife.
We should have done this in person, man.
Well, I mean, I'm pretty far from you. You're over on the East Coast.
Yeah, I guess
way
so.
Out to the west. But me and my wife, we regularly drive up and cross the border to go skiing up in BC up there.
So I was actually born and raised in Vancouver. Absolutely,
really?
Absolutely beautiful. Grew up skiing on Lake Whistler, Grouse, Seymour.
Nice.
Similar to Toronto, Vancouver, the real estate market there is absolutely wild, extremely pricey, really hard to get more traditional deals done. But and that's the tough part about Canada is, there's a few major markets and they're all really, the barrier to entry is really difficult for a lot of people.
Yeah, not only because price point is one thing, but let's dive into that, because I think that's really
Sure.
interesting that a lot of people don't realize is that the way that the United States does real estate is not typical, where we have 30-year mortgages,
Yeah.
right? And you can go in, you put low down payments on stuff, you can get stuff for 30 years at a fixed rate. You go to most countries around the world, that's not the case. I know Canada is the same. I think Canada, what do you guys do? You do like 10-year fix and then you have a balloon,
No, I
or
mean, not even like we can do 10-year, but like no one takes that. Like a very small portion of the population actually takes those mortgages for like well over a decade, and kind of throughout history. The most popular mortgage product in Canada is the 5-year fixed. So we lock in our mortgages for 5 years, and you can imagine how volatile that makes a market when we've seen drastic changes in interest rates, drastic changes in prices, inflation, etc. It just makes the cycles a hell of a lot tighter than if I were to lock in a 30-year mortgage. It's exponentially different.
Yeah. How does that affect like your analysis and your viewpoint when you're looking at deals? Because so many people here, I mean, you'll hear people say like, oh, if it's not something I want to keep forever, I'm not even going to buy it. That's kind of like an amateuristic way to look at real estate, but you do hear that a lot. But you don't even have that luxury, especially if you look at 5 years ago versus right now. Rates have completely turned on their head. And then people that bought in 2020 and 2021 when rates are rock bottom, they're really going to be facing some weird stuff here in 2 or 3 years. So like, you must account for that when you're looking at your numbers, or do you just basically plan to exit everything before then?
No, I mean, the team and I are definitely kind of leaning towards team never sell. We I don't think we're as naive to say that we want to hold things forever. There's obviously the right time to sell for a number of different reasons, whether it be, kind of trying to time the market and watching cycles happen, whether it be, we need cash and, we're done with duplexes now, we're buying apartment buildings strictly, or we're done with multifamily, we're going into commercial and we need a big cash infusion. So that totally depends. But yeah, I mean, to answer your question, 100% we work those rates in. The team, we've gotten used to running things at much higher. Even like we're trying to build in cap rates in the double digits and make sure that there's enough cash flow to, cover a 10% interest rate if things got there. And to be honest, a great investor that I know up here told me even before, and this is like 2 years ago when rates were rock bottom, he was telling me, he's like, we don't buy deals unless they work at 12%. And rates back then were like literally between 1% and 2%. So this guy was building in, right? Exactly. It is crazy. And for most more amateur investors, they're like, that's insane. This, I'm buying this at 2% and it's absolutely cash flowing like crazy and it's appreciating, it's a miracle. Well, it was a miracle, and it was completely fabricated by, the effects of, what that lasted for a couple of years. I don't want to say it in case we get, shadow banned here or something like that. But, rates, anyone that was buying, and not working higher interest rates into their performance, in my opinion, isn't really a real estate investor. They're strictly kind of speculating and almost acting as like, day trading real estate, which, unfortunately did very well for a lot of people. And I think messed with a lot of people's heads thinking, I buy, I hold for 3 months, I put a coat of paint on and, I make 150 grand. Or I buy and, and it's cash flowing $1,000 a month at a 1.75 variable interest rate. Well, now that interest rates are at 5, is that place even still cash flowing? Are you negative cash flow now? And if you were banking on just your interest rate to essentially carry your cash flow and your appreciation, well, you've made a big mistake, because now neither of those things are happening.
Mm-hmm. Yeah. So when they have those adjustments, is it just like to whatever current market rate is, or are there limitations? So like, for example, I have adjustable rate mortgages on some of my properties. They're commercial loans. And basically they adjust, their 10-year mortgage. commercial loan, they'll adjust it year 5 and year 7, but there's a limit on how much it can actually increase above the original amount. So it's not like it's literally not possible for my loans to go from 3 to like 12%, even if it was at 12%. So, but yours, it sounds like they can just go to whatever market interest rate is at that point.
Yeah, so essentially the Bank of Canada will set the overnight rate. Banks will then respond, and we've seen the Bank of Canada, raise essentially nonstop, aside for one or two meetings for the past like year and a half, maybe at this point. No, just the last year. And we're expecting another rate hike June 7th. The Fed has just raised, and we've seen CPI and job numbers come back higher than expected. So the likelihood of another raise on June 7th is very likely. Let's say it's 25 to 50 bips. The bank will then make their rate. The Bank of Canada will then, increase their overnight rate, and all of the big banks and lending institutions here will follow suit and raise their prime rates to reflect whatever the Bank of Canada is. And then, of course, those rates will vary depending on what type of product you have. So yeah, I mean, we've been locking in on some of the smaller stuff, 5-year rates. We do have CMHC, Canadian Mortgage and Housing Corporation, up here, which is a federally, like a federal insurance and kind of like housing advocacy group that does offer some pretty great rates that will allow for longer amortizations, longer terms, and lower rates. But you have to really fit into specific niches to capture those mortgages. So yeah, I mean, for us, look, we try to get the best deals we can. We give ourselves more than enough padding, go in for 5-year terms, and we know that, and we also look at each project individually, right? Like, are we going to be looking to refinance this property in 3 years after we've done some tenant turnover and, we've brought units up to market rent, or we've done some capital expenditure and done some value add to the property. So if that's the plan, then we won't lock in a 5-year fixed term. We'll lock in a shorter variable term or a shorter fixed term with the intention and the strategy that we'll be pulling money back out of that property.
Interesting. Yeah, I mean, it's kind of like, it's the same at its core general model to what goes down here in the US. It's just that you have to be a little bit more proactive in like the short term. And you need to be a little more conservative too, because we're similar down here where a lot of people got spoiled in 2020 and 2021, just with how the housing market went. And you had all these amateurs enter that didn't really understand what it was like for the rest of time before that. Right. And you're especially see it down here with like Airbnbs and some of these other things that,
oh man, it's crazy,
seeing prices for, because they didn't understand that people don't always rent, a single family home in a neighborhood for $1,000 a night. And they're only doing that because they can't go to Europe right now. It's just a different thing. And so, now it sounds like you've kind of gone through the same sort of process up there. No, that's cool. So I guess, regarding, like Canadian real estate in general, before we dive into your LandBank business, is there any sort of like unique things that you look for up there, sort of like gotchas, anything else that sort of separates it from American real estate that since most of our listeners are American?
Yeah, I mean, look, the market here is a lot smaller. Again, we've kind of got 2 or 3 major markets, maybe 4 or 5 major markets across the country, probably 30 markets that are covered by the likes of like JLL, CBRE, Cushman & Wakefield, et cetera, where they actually put out like cap rate reports on different asset classes in those markets. So really like a hell of a lot smaller. The funny thing is, whether you're here, there, whether you're a billionaire or a millionaire or just getting started, I'll tell you now, the fundamentals of real estate literally stay the same wherever you go. So we really just try to stick to the fundamentals, and that goes to knowing our investment thesis, having the right power team in those specific areas, really doing our due diligence on where we want to invest, what those return looks like, and trying to be as value add investors as possible. There's for all the American listeners, anyone who's a Twitter user. I'm not a big Twitter guy myself, but there's this great guy, strip mall guy, Real Estate Trent. I'll give him a shout out. He has this one quote that I love. It's that I don't buy real estate because I think the value is going to go up. I buy real estate because I can make the value go up. And that essentially is real estate investing 101 right there. If you can really start to unpack that sentence, I mean, that sentence could be, summarize that's a book right there if you want it to be, right? So, the fundamentals are all the same. We really look for more emerging markets, and we've been doing a pretty good job at that so far. But as obviously markets emerge, more people find out about them, and you got to go find another market. So that's why we're not only expanding across Canada, but we're also, expanding across America. And then something cool that's maybe more Canadian specific, but I think will really start to play a role maybe across North America, because we've seen it happen in Europe is a lot more of the missing middle type of like greenfield and infill development. And just a quick definition on missing middle, because this is a thing that plagues most North American cities. So where I am, Toronto, let's use that as an example. Minneapolis, or pick a city. LA, another great example. Philadelphia, another great example. If you know those cities, there's a central business district where you have a bunch of office towers, followed by a bunch of condos and apartments for those people to live in. And then it kind of just drops off from any, 30 to 60 stories, and then drops all the way down to basically, 2 or 3 stories. So you really see a kind of a city coming out of the middle of nowhere, and then just housing, urban sprawl housing as far as the eye can see. If you look at places like Copenhagen or Amsterdam or Madrid or Rome, older cities where urban planning, was, a bit more well thought out, and they truthfully just couldn't build skyscrapers back then. You'll see like
700 years ago.
Yeah, exactly. The building technology has kind of come a long way. But I mean, even if you look at New York and Chicago, right, they allowed for construction to be, they allowed for different building code and different construction to happen, 100 years ago, 200 years ago. And that's changed the layout of those cities. So anyways, the missing middle housing is basically anything kind of, between bigger than a duplex, smaller than an apartment building, right? So a 6-story, 20-unit building with retail on the bottom kind of thing. So we've just recently passed some laws up here that are they're allowing for more of that kind of construction. I just think that's going to be and we've also started to pass some legislation up here for laneway homes, garden suites, whatever you want to call them, laws where you can basically now fourplex anything on a single family, what used to be a single family lot. So we're looking at that as one of the next major trends, and probably a major opportunity for Canadian real estate investors. But I think that that'll be contagious, and I think we'll start to see a lot of that throughout North America. I hope so.
Yeah. I mean, maybe it's. I think a big challenge there. So we have that same problem, obviously, all throughout the United States. Especially you got to the West Coast where cities aren't quite as old. It's like where I'm at in Spokane, we have exactly what you described, right? We have kind of like general apartment complexes, which are pretty big. And then we have just sprawl forever.
Yeah.
It goes out in all directions. And, it creates an affordability issue. Mainly.
100%.
But one of the problems that we have, even outside of the building restrictions, is just the cultural expectations, right? People here, they don't want to live in those middle housing. They either want to, live like the downtown lifestyle where I'm in an apartment, I'm like, can walk to the coffee shop, to the bar, whatever, or they want to live on, in a house with a backyard with their own land. And you start to get people into like the smaller apartment complexes that are a little bit more reserved, like the small multifamilies. Those become kind of like transitionary housing for people. They'll do that as they are like getting prepared to buy a house, or they are, fresh out of college, whatever. Or they are in a position where they're like have to step down to that because they got divorced, they had something and they can't afford a single family home. And it's never like people are never choosing to do that. Versus like you go over to Europe and it's like, oh, I live in this flat in Amsterdam. I've lived here for 20 years. Right. And that's just kind of like what they do. And if they want to live somewhere else, they'll move to a different neighborhood with the same style of setup. I've like family, quite a bit of family that lives around there, and that's literally what they do, except for those that have been able to make it wealthy, then they'll go and they'll buy a house. But that is not the middle class standard. So it's just
It's funny, you know. You're so right. It is. It's like it's a chicken or egg thing too. It's like, is it a cultural thing because we never had it and we could never offer it, and it was never just part of, you know, the transition of moving up the housing, moving up or down or laterally on the housing ladder, or is it, you know, is it the fault that the other way where we just don't like it because we don't know it, and because it seems so foreign to us, right? So. Yeah, no, good point.
I mean, and there's parts to it too, like just American culture. The things like the general services regarding public transportation aren't the same in most places. You know, the culture of like having the corner store where you go buy your groceries is not the normal standard. Like people expect to go to a Safeway. They don't expect to go to the little corner shop to buy everything they need for the week.
Yeah.
And that's at least in the West Coast. I know in like the major cities in the Northeast, it's a little bit different, but that's a very small part of the country.
Yeah.
So that's interesting. So let's dive into your LandBank company, because I know you do a ton of stuff with that. You know, a lot of lending associated with that too. So I'd like to hear more about what you got going on there.
Yeah, so I'll talk a bit about the team and a bit about a few things we have going on. So the team's made of myself and my co-host on the Canadian Real Estate Investor Podcast, which is the biggest podcast for real estate and investing in business in Canada. It's the two of us, and we kind of make up like the marketing and business development side of it, you know, deal finding, etc. I like to say I'm by far the dumbest guy on the team, which is a great person to be on a team like that. We've got an investment banker who's kind of been a CEO for hire in the past, a long-time real estate investor as well. He handles a lot of our private equity relationships, etc. We've got a CPA/CFA type who puts performance together that are, you know, far beyond me at this point. Much better than my napkin math on duplexes, which I kind of got my start in. And then my other partner who is initially partnered with me on the residential mortgage business. So we were both loan officers. He did a lot more of the private mortgages, and he was just bought out from a similar company that had done a few billion in funding. So yeah, I mean, it's really cool. It allows us to do anything from, you know, assist in the buying and selling of large multifamily properties, you know, general real estate and consultancy and advisory, all the way to, you know, brokering large sums of money. So for instance, we're funding 2 400-unit builds on the East Coast. We're funding a 1,800-unit building kind of in the middle of the country in a province called Calgary. Lot of different stuff. We're even trying to we're in the early stages of building out a financial product specifically for homeowners with enough equity that they can build out an additional suite in their home. So we've got a really good kind of creative team. I'm confident I've got some of the best executors in the country. So it's just Dan and I get the fun job and get to go out and talk about it, and hopefully you know, connect with great people and bring in some business. And that same group actually is part of we're all kind of in acquisition mode where we have a portfolio of about just about to be hopefully, if we get this last one closed, just over 50 doors between the five of us, and then we all have a few holdings outside of that 50 doors. So we're a busy group, but we all love it. Live and breathe real estate and business, and having a lot of fun doing it.
Nice. That's cool. So, you know, with your focus on, it sounds like the focus of it is mostly on the lending side. So I guess, how does that work? It's not like a traditional lender with all those different products. I imagine you're not, you know, selling those to the bank, but they just have like a fund, or like, what is that whole situation?
So yeah, the fund is in early stages. Right now it's a lot of finding great deals, brokering to other people. Yeah, brokering to other people within our network. So we've got we do have a lot of private equity. You know, we work with family offices across the country. So you know, we're agile, and I think we're well connected enough that, you know, if a builder needs something, we can make it happen.
Yeah. I mean, brokering, and when it comes to lending, is a great way to go, because, you know, it's the transactional version of it, right? It's like wholesale houses. Almost.
Exactly. Yeah. Yeah.
And I don't think a lot of people fully realize what a loan broker does if they're not super versed in real estate. But like if you're a loan broker and you're good at it and you have a big network, you can make a shit ton of money. You know, and with honestly not an insane amount of work. Some of the wealthiest dudes I know in different groups that I'm involved in, they have loan brokerage teams and they have a big Rolodex of lenders with different products, and they just pair person A with lender B, and they have like their people on the back end that run all the paperwork, and they just print some pretty fat checks from doing that. So,
Yeah.
you know, like it's the benefit of having the fund is you can get like the reoccurring income, right? If you're carrying the loans yourself, but that's also carries its own risk and its own work applied to it. So, no, that's cool. So, I guess what is your ultimate goal with that business? Because I mean, is that just like cash generation, or are you trying to do something really large with it? Like if I said, what does LandBank look like in 5 years? What are you hoping for it to be?
Yeah, I mean, great question. I mean, I think with all the businesses, right, they all kind of work with one another, right? The acquisition business, we're building that up. Land bank deals fund us personally to acquire more. The podcast and all of the social media stuff and the news appearances and everything we do on that side of things legitimizes us and you know builds trust with our audience across the country. So we're so lucky in the sense that we're really not doing a ton of outreach to a lot of people. A lot of our stuff is inbound these days, which is just fantastic. So you know, 5 years. It's funny you ask that because I'm always trying to be the guy with the plan, and I always you know have these grandiose thoughts. But if you'd asked me, you know, even a year ago where I'd be now, it's you know I would have been really wrong. And so I mean I think LandBank and our mutual goal with everything we're doing, as I said, between the podcast, the acquisition business, and LandBank is to really make a solid impact. I mean, look, we all want to make a lot of money, and I'm sure we will. There's a lot of sacrifice involved in making a lot of money. Anyone who's made a lot of money, unless it was, you know, flipping a house 2 years ago, anyone who's made a lot of money will tell you that there's a lot of sacrifice involved. So we're still putting everything back into the business. I'd want us to be, you know, one of the premier boutique firms in the country. You know, ideally funding, you know, a few billion or $1 billion a year would be amazing. You know, the goal for the acquisitions is to hit 1,000 doors in 5 years. And then the content side is to just keep on putting out great free content. And then to slowly build out some more. We haven't done any paid stuff yet, but you know, we put out hundreds of hours of free content and our podcast. We don't have guests. It's very heavily researched. So, you know, 100 episodes. We've had, I think 6 or 7 guests. One of them was, you know, 2 of them have been billionaires. So we've just really been very focused. And I think that, you know, it's honestly hard to answer because if a year ago I would have said, you know, I hope the podcast is doing well and blah, blah, blah. But, yeah, just to really keep on pushing. There's this one quote that I'm trying to remember without butchering it, and I'm going to paraphrase here, but it's people always overestimate what they can accomplish in a year and underestimate what they can accomplish in 5. So, I mean, and again, for anyone listening that is just starting out or that's maybe in year 1, 2, or 3 of real estate or whatever business within real estate that you're doing, you know, really like that quote really hit me hard because, you know, you start to see progress even in, you know, I've been real estate investing for probably 5 years now, but we've only been doing this podcast for a year. And it's truly amazing how it's changed my life. And Mike, I'm sure you can relate to that with this podcast, just the amount of amazing people that you've spoken to, the opportunities that it's brought you, and so on and so forth.
Yeah. I mean, it's funny. It's one of those things that it's like everything else. If you're consistent with it, it adds up dividends, you know, in terms of your network. Your credibility is so huge. Even if your stuff, like everyone always thinks it has to be perfect to like compare to like the 0.1% of podcasts. If you produce anything, right? And so like people can go and they look up me now, and I show up as the host of the Collecting Keys podcast. They go and they Google me and they see that we have, you know, 100 and whatever episodes we're at right now. That's a huge amount of credibility, right? Because that shows longevity in the business. And people can go and they can cherry pick different topics of conversation they're interested in, and they can learn a lot about you. And all of a sudden, any sales conversation you have is better because they already feel like they know you. The rapport is already there. People seek out to you, like reach out to you and seek doing business with you because they already feel more comfortable with you. So even like before you get on the phone, like they are actively seeking you. And then also too, you will have like the networking effect of people who know of you but have never talked to you. They will refer you to people because they like, feel like that they have a relationship, even though you have no idea who this person is. And like, I've literally gotten on calls with people and they're like, oh, my friends are like a really big fan of your show. They said I should check you out. And now I'm on a phone call with you. I'm like, cool. Who's your friend?
Isn't that fantastic?
Never met him.
Yeah.
All the time. Yeah.
Yeah. I love it. And I think sorry, go ahead.
Oh, no, I was going to say, it doesn't even have to be that big. Like we have, I don't know, a few thousand listeners that are like regular. I think three or 4,000 is what we about figure. But you think about what it would take to get in front of 3,000 or 4,000 people in person, right? It's a huge effort versus being able to do that every single week from the comfort of my own little home studio here. It's pretty wild.
It's amazing. I couldn't agree more. And I think that trust is amplified because, you and I aren't just sitting here talking about real estate. We are actively doing everything we can to be as involved in real estate outside of the podcast. So I'm going to hit you with something else here called the T theory, TEA, and it's a Patrick Bet David thing. And we ask people to leave us reviews all the time, and I'll be leaving you a review as soon as we're done here. And because the reviews mean a lot, right? Like it really does mean a lot. The podcasts are a ton of work. People usually don't realize that. So we ask people for reviews. We sometimes read them on the show. And this one was probably one of the best ever. And it's called Information You Can Get from Different Sources, which is a Patrick Bet David, Your Next 5 Moves. So the T theory. T is theory, who are people who are very good at teaching you theories, but they've never done what they're teaching. It is the lowest type of mentorship. Okay, there's a lot of people doing that kind of stuff right now.
Yeah. Like every college professor that teaches business.
Yeah, pretty much. Yeah. Have you ever started a successful business, sir?
Yeah, right.
The E is experience. That means they didn't run a business, but they worked very closely with someone that did. And now that is better than theory mentorship, but still lacking, right? So that's T is theory, E is experience. The A that makes up T is application, which is the actual source. This is a person who tells you what they are doing, that they have actually done these things. So this person tells you what they've actually done, the things that have worked for them, the mistakes they've made. This is the entrepreneur that has their own theories, has their own experience, and they've applied these theories and experience successfully. And this is just part of the review. I call these guys trifectas, and it's tough to find them. You guys are type A. So again, you would be a type A as well. And I think that, there's so much information out there right now, and there's so much good information, but there's so much more bad and useless and, T and E type of information. And there's probably a category even lower than that where someone is literally just recycling something else they heard and, has a better voice or better looking or better background or whatever it may be. And they get some credit for it. So just be careful where you find your information. But, I think that really legitimizes, people like us that talk about what we're actually doing and have a drive and a desire to share, our unique experiences with people for the sole purpose of helping them and trying to build a community around that.
Yeah. Well, I think podcasts are a great way to show that like A-level expertise as well, because it's long form,
exactly.
Like anyone can BS a 90-second Instagram reel. It's hard to BS hundreds of 30 to 45 minute podcast episodes. Yeah. People will eventually catch on.
Eventually, yes.
But you can, eventually, yeah. But you can screw around with Instagram reels forever, right? Like, it's only a matter of time before there's the next Instagram guru that's actually going to be all AI. It's not going to be a real person. Like I'm waiting for that to happen.
Good call.
So, awesome. Right on. Well, good stuff, Nick. We're going to start to wrap up here and get into the end of show questions.
Sure.
I appreciate everything that you shared. You got some really cool stuff going on. And I love
Thanks, man.
meeting people that I would say are like true real estate entrepreneurs. you got your hands in
Appreciate
a
that.
lot of different spots, and I've always been the same. Cool. So end of show questions, the same 3 questions we ask everyone that comes on the show. The first one, which is always the fan favorite: what is your craziest real estate investing story? This can be a big win. This can be a big loss. This can be a crazy tenant. This can be about the time that you had to clean out a bathtub that homeless people had been using as a toilet for 3 weeks. Like whatever you got. What's your craziest story?
Man, I should have prepared better for this one. There's a lot running through my head right now, and I've just like any landlord who's been doing it for a while, you have seen and heard and way too much shit, like way too much physical, real shit. Part of my language, because there seems to be a lot of that in some houses. I'll tell you a recent one, which is kind of just a good story, good and bad, and I'll make it quick. So we just were looking at this 7-plex. It was kind of distressed. We had it off market. We hadn't even seen it yet in real life, but we had just looked at the numbers and we're like, okay, this looks decent. We put together one of the best deals on paper we've ever seen. We had a 80% vendor take back mortgage. So seller financing, what you guys would call it. We had that at 5 years at 0.25%. And we were just, the door, it was like $66K a door or something like that. Like, it was just really, really good. So we were all fired up about it. And we recently bought one property sight unseen, and I just saw it for the first time, and it's not that pretty. We're going to have to be doing some work there. So we didn't want to do that again. So we drove up, saw it, and, 5 tenants out of the 9 were probably on crack at that point. There was really unfortunate. There was a probably really nice, outside of the crack addiction, really nice young lady, who was screaming like crazy on the phone as we were about to knock on her door. She opens the door blatantly, kind of weird. And we're just like, hey, sorry, we haven't noticed here. We just got to come in and take some pictures. We leave. As we're leaving to go to the next unit, some guy literally shows up to either buy or do something else with this lovely young woman. She's like, hey, wait, come back after they're gone. So she was just conducting a little business as we were there. Long story short, we brought one of our contractors. It needed like well over $300,000 worth of structural. There was way too many drugs and way too many headaches. So unfortunately, it was incredible on paper, but bad in real life. So we walked away from that deal.
Yeah, right. I mean, this is always it's a little red flag, right? If something sounds like it's too good to be true, it probably is. That always exists, and a lot of people pretend like it doesn't. That's a good one. In fact, we've had crackheads as well. I think one of my we had a similar sort of potential prostitute. Well, not potential prostitute. We knew it was a prostitute. Where we had a duplex that we did. I was there with the landlord, and the story was there was the wife and husband that had rented the place. Husband went to jail. Wife is there by herself. Wife got a new boyfriend. New boyfriend kicked the wife out. Now the guy's in there without a lease, and he started running a little brothel out of this complex.
Oh my God. And enterprising. Wow.
Oh yeah. He's an entrepreneur. I can't be upset about that. And I'm literally standing outside the property with the landlord. We had just walked like one side, which had a nice family in it, and we weren't able to get to the other side. So I was just chatting with him, get ready to make my offer. And this lady comes out of it, and this is in like a neighborhood. She's wearing like these teeny tiny shorts that she should not be wearing, and these high heels. This is at 2:00 in the afternoon on like a Thursday. Man. And she just comes walking out, and she walks by and she goes, "Hey boys," and just like heads out into the neighborhood wherever she was going. I have no idea.
No one followed her, right?
No, God, no. But yeah, no, it was. It's just the stuff that you see is crazy.
Oh man,
but, that's a bummer. Should have just axed the price 50% and gone for it, man.
That's what we said.
More stories.
We said, hey, look, we'll just take over the debt. The debt was like $300,000 now. We're like, look, we'll just take that over, and and he wouldn't budge on that, but he might come back. We'll see. I'll keep you posted.
Yeah, there you go. Yeah, that's a good one. Cool. All right. Next question. What is the number one tip you would give to either a new investor looking to get started or to a small time investor looking to take their business to the next level?
Yeah, absolutely love that question. I answer this question for podcast guests in a variety of fashions, probably a couple dozen times a week. Depending on where you are, the most physically, geographically, and kind of figuratively in your career, the best possible advice I can give that's kind of umbrella advice is find a mentor. Find someone that is doing what you want to be doing. Make yourself valuable to that person. Learn as much as you can, and take what they have to offer and utilize it. That is literally the best. That transcends real estate. That's literally anything. That's life, relationships, small businesses, whatever. So go find someone that's doing it better than you. Make yourself valuable to that person. And good things will start to happen.
Yeah, absolutely. And don't be afraid to pay for it. That's what I was at on that too.
Yeah, for sure.
Amazing.
For sure.
How much an aversion people will have to paying those A-level experts that you talked about, but they'll go and take out a $200,000 loan to pay for those T-level experts at that university.
Yeah. Or to go and try to do it themselves and squander half of that away, right? I mean, education and networking are just so important in this business and in business in general.
Yeah, absolutely. Great tip. All right. Last question. Where can people find you, follow you, and reach out to you if you'd like them to do so?
Yeah, for sure. So go listen to the podcast. I know it's called the Canadian Real Estate Investor. That's just for SEO. We talk about a lot of evergreen.
That's a great SEO title.
Exactly. Right. So, I mean, there's a little piece of advice to anyone who's looking to start a podcast. Don't be afraid to niche and really SEO. That's how people are going to find you. Right. So we were lucky enough to land that name. Go check that episode out. We talk about macroeconomics. We talk about North American stuff. We talk about real estate fundamentals. We talk about guys like Zeckendorf and Sam Zell and what to learn from them. Not just Canadian stuff. My Instagram name and Twitter handle are my buddy Nick. So the second you add me, we're buddies. And there we go. Yeah, there's my email's probably plastered all. Yeah, perfect. My email is plastered all over the place. So whether it's you want to send something to the podcast or you want to get a hold of me, nick.hill@landbankadvisors.ca. CA is for Canada for all you American folks. That's what the CA.ca, not .com.
What it is. I thought it was like a special domain you had to pay extra money for.
Yeah. We'll go with that.
No. Awesome, man. Well, thanks, Nick. I appreciate you coming on the show, and I appreciate you being a good sport with my Canadian jokes. They were
I love it.
All stupid, but anyways, man, super cool to meet you. Super cool to hear all you have going on, and guys, you should definitely go and check out Nick's podcast and reach out to him on Instagram. In case you can't tell, he's very knowledgeable about real estate. He likes to talk to people, and he is coming on the show because he wants to get in front of more people. So you should definitely go and listen to his stuff, reach out to him. And I have a feeling, Nick, that if someone sends you a DM, that you'd be more than happy to chat with them as well. So
100%.
People should go and take you up on that. But anyways, guys, thanks for listening. Please go and share this with all of your friends. North of the wall, south of the wall, wherever. I guess we can't see the wall anymore because now it associates Mexico, and that's a weird political thing.
I was thinking Game of Thrones here for a second, but
that's what I was going for. But someone ruined that for us, unfortunately.
Yeah.
But either way, and any friends you have that appreciate real estate investment, business, or just like to hear people talk about crazy stories and that sort of stuff. So share it with them. Leave us a 5-star review wherever you listen to your shows. And thanks for listening, everybody. And we'll talk to you all next week.